Welcome back. Welcome back to another video. As you can see, I put myself on the left side of the screen because whenever I put myself on the right side of the screen, it always blocks the view. And sometimes whenever I want to show you things, it doesn't show in the video because it's blocked by me, like by this, by me. Anyway, welcome back to another video. For today's video, it's the same. It's gonna be about accounting, advanced accounting from the Beams book. I'm gonna be going through two questions from chapter 8. It's about basically this chapter talks about what happens to the accounting treatment if the ownership of a company changes. This is new, right? So we're gonna go through it. Okay, we have two questions, 8.2 and 8.11. We're gonna go through 8.2 first. So for the first question, Victor acquire Edma. Yeah, that's the company. So they acquired the company on three occasions: February, August, September, and this is their Edma's income. So I've put like I think all of the information that I needed here. So sorry, I just took a shower. So yeah, uh, so I've put all the informations here. First of all, we have the current ownership, which is 60%. I got it from adding 5, 10, and 45. And then this is the cost of 45%. And this is the implied fair value. We kind of learned how to do this already in class. And the net income of 60. So those are the relevant information that we're going to be using for the first question. So the first question asks to calculate any gain or loss to reevaluate the investment. So why do we need to calculate gain or loss? Because essentially, when we're doing these kind of things where we acquire companies, we buy ownerships on multiple occasions. I think there might be something wrong with my camera. Wait, hold on. Okay, I think it will fix by itself. Okay. Sorry for the inconvenience, but I'm just gonna continue. So for cases like this, you want to first of all add the costs for the first two, because these first two payments, they haven't really got ownership yet on the company. So let's just add these two. Okay, I'm back. Add these two like this. I got 31, and then we have the interest when they calculated uh this, but I multiplied by 15% because we want to compare these two, which totals for 15% with this. And so I got this number from basically I have 220 here. 220 is the implied fair value, and I multiplied it by 15%. Like, so what would be the ownership, like the fair value, if we use this number? You know what I mean? So compare these two, and that's basically the gain, because now the what it means is that the value, like the fair value, is now different because these two transactions occurs in the past, and things changes, and we have to measure that, and we get a gain of this. And that also leads us to the oh, not really. Okay, second question asks different things, which is the income. They want the income, and so we have 60. 60 is not the full income. It's not the final income because we only own 60%. So we have to multiply that by 60%, which I did. But then what I also did is I multiplied the results by 3 over 12, because they earn ownership on September. They didn't own the company. They didn't gain ownership of the company from February or August. So they gain the ownership on September. So they can recognize income from September. That makes sense, right? So from September we have October, November, December. That's 3 months. So I only recognize 3 months from the 36 that we have here. So that's the answer. And number 3 is to calculate the amount of investment. So it's just adjusting the investment account. And so what I did here is I put like a couple of journals. We have the journals of purchasing 5% of the company. This is like investment and cash, right? The same thing for purchasing 15% of the company, investment in cash, and the same goes also to purchasing 45%. But then from this, they have gained ownership. The Victor gained ownership of Edma. So then there are some adjustments that needs to be made, such as the gain. You need to recognize the gain that we previously calculated here of 2,000. So the way I recognize it is I increase the investment account and I recognize the gain, in like a gain account. There's also another thing, which is income. We have calculated the income before, and then we just need to increase investment and increase income. And so from there, sum it up, and you should get 141. That's how I answered number 1. For number 2, I mean the second question. We're gonna go through the second question real quick. These are the information that I think are relevant. So ownership, initial balance, total equity balance, purchase. They purchase 1,000. They repurchase 1,000. I'm sorry, and they have an outstanding stocks. Okay. So for the first question, we have to calculate the ownership percentage, and so the question has given us that that Nora has 70% of ownership, but then this is not the final result because during like somewhere in the year, Benz, the subsidiary, they repurchase some of their stocks. So basically what it means that if you have a pool of stocks, outstanding stocks, if they repurchase some of the stocks, meaning that they skim some of it, so the pool becomes smaller. So logically, if Nora has an ownership, like a stock ownership on the company of 6,300, which I got by multiplying their ownership percentage and and the outstanding stocks, 6,300 is worth more when the pool of ownership is like less, right? So the initial pool was like 9,000, but then they repurchase 1,000, so the pool gets smaller to 8,000, right? And so 6,300 worth more if the pool is like 8,000 compared to 9,000, right? So there's like a change in ownership, if you get what I mean. And we can already tell that it will be an increase because now it worth more. And I calculate this by, just comparing 6,300 to 8,000, which should give us this percentage. Oh, wait. Accidentally pressed something. Okay, for B, question B asks to prepare a journal entry to adjust investment account. And so what do we need to adjust in this investment account? Now, we have a change in proportion, okay? But we also have a change in total equity balance. So initially they have 450 of equity balance, but then they repurchase 1,000 for 60, meaning that they repurchase 60,000. And so the equity balance will decrease. No, you know what I mean? The pool becomes smaller, right? And so it will decrease by 60. So we deduct that by 450 by 60. We should get 390. This is their initial ownership of 315. I got this by multiplying the initial total equity balance by their initial ownership as well, just for comparison. And their ownership after the adjustments is this amount, 307. I got this by multiplying the new total equity with the new adjusted ownership. And so, change in proportions again. You have this. And now we compare this initial amount because initially they have 315 and now they have 307. So there should be a loss from that, right? And the loss will be this, 7,875. And we just need to put that in the journal. And we put that by decreasing investment account. That makes sense. But we don't recognize loss. Instead, we recognize additional paid-in capital. So the logic is that the changes in ownership, because it's, in a way, it's indirect to them. Like they didn't necessarily, it's not the case in which there's like overvaluation, undervaluation, in which you record loss, gain or loss. In this case, it's like indirect because it's from the acts of the subsidiary company, Benz. And so Nora didn't really do anything, but they got a loss. So they can recognize it as, instead of a loss, it's something that they paid more. So that's why like you can recognize it as additional paid in capital. So that's for B. For the last number C, calculate the amount of investment. I think it's quite straightforward. Now you have the initial balance of investment account for 350 here, right? In the question. So you just need to adjust it with the loss. And I think that that should be it. Like yeah, it's pretty straightforward, but you should like adjust this with this, the loss that you get from B. And so you should get 342 125. And yeah, I think that sums up for the whole video. Thank you for listening. Please do correct me if I did anything wrong in this exercise or if I have done something correctly, but then I do it in the wrong way, because always want to learn. You know what I'm saying? And yeah, I will see you in another video. Probably gonna be next week. So yeah, goodbye. Goodbye.